In this video, I'm going to be breaking down a full strategy video that you can use in 2025. Now, you've probably seen me do a bunch of case studies on this channel with this certain strategy. So today I figured for the new year, I would put this all together for you and we can make a little checklist, and then we'll just go through a bunch of examples, and hopefully you can use this strategy to find success in the markets. We're going to be using the weekly time frame and the daily time frame, as you can see right here. For our bias. So the structure we're going to be following is going to be on the weekly and the daily for our overall market sentiment. And then we're going to be using the 4-hour time frame for our entry. So this is the time frame I personally use for my entries, and it brings a lot of clarity, especially if you have a 9-to-5 job or you're like me and you don't want to be on the charts every single day. You're able to use this time frame and kind of be in trades for sometimes a day up into a week. And it's very, very calm, very calm. So this is the steps. Before we get into the video, I want to show you the steps. So we're going to determine the market direction, where it's headed. Okay, so that's going to be step one. I'm going to show you how to do that. Step two is the point of interest. So POI must have swept the stop losses of other traders. Okay, so that's number two. Number three, it must break structure afterwards. Number four, left behind an imbalance plus inducement. So inducement is just liquidity above or below your limit order, depending on the bias. And then number five is enter in the imbalance in premium or discount of the range, which I will show you. And then number six, for our target, we're going to be targeting opposing stop losses. Okay. And then I have my website here where we have testimonials from traders, and you can go check that out and see if maybe you're interested in trading this 2025 with us. But regardless, that's not the point of this video. Let's break this down. Okay. So as you can see, we're on the weekly time frame here, and you can see that the market is overall bearish, right? We are trending bearish after we ran the stop losses of the traders up here. Okay. So when I'm talking about number one here, determine the market direction and where it's headed, when we run the stop losses of the traders over here, more than likely, we're going to then go look for the stop losses of the traders over here. It's kind of like a game, right? We go from one side to the other. So the stop losses are going to be here. They're going to be below this low over here. And then the final destination is going to be over here. So since we have that high time frame direction, then we can jump down to the daily and see, okay, what are we looking at? Well, if we're looking at it right here, you can see we're clearly trending bearish, right? And we're expecting the market to trend bearish up until at least, down until at least this low over here. So what we're going to do is we're going to go mark this low out. Now that we've looked at the weekly, we've looked at the daily, then this is where we can look for the 4-hour time frame to align and give us our entry idea. Okay. So now we can go to the 4-hour time frame. And what we want to see is something like this, right? We want to see something where we sweep liquidity, we sweep those stop losses, we have a structure shift down like this, and then we retrace like this, and then we look to short like that, okay? So let's go through the steps. This model right here, this is step two. Step three is this right here, where we break structure below something like this. Step four is the imbalance that will get created like this as well. And then step five is this inducement, okay, which I will show you guys. And then step six would be targeting the stop losses of the opposing traders. So that's ideally what it's going to look like, right? This is a trend following system. We are trading with the trend, and we are trading with the overall market sentiment. So now from here, all I'm going to do is play this out, and we're going to wait for structure to be created. We're going to wait for an imbalance to be created, and then we can look to get into the market. Okay. So here you can see we get just that. We sweep liquidity right here. We have the break of structure, which is going to be below this low right here. So this is our break of structure. I'm just going to go and label this as BOS. This is the imbalance that is created right here. Notice how there's a lot of momentum in this candle. So this is an imbalance candle, and it's from this candle low to this candle high, right? This is going to act as a magnet in price. See right here, there's no imbalance. See the difference in candles here versus the candles in here, right? So what we're going to want to do now is wait for the market to trade up into this area so then we can short it, okay? So this is a trade I actually caught, which I think I have shared before, but it was just an absolute beautiful one to plan, and thought it would be a perfect example to start us off. So pay attention how we just front run the imbalance. So this is going to be our liquidity or our inducement that we are creating below or above the entry like I talked about earlier. So for instance, in this trade, it's going to be below because we're looking to short. If we're looking to long, it's going to be above. Let's just continue to play this out. This is our first level of inducement. So if this imbalance here was mitigated or traded into, I would then be looking at this area. But because this area is still left untapped, then I think this whole area is going to be a trap, and then we're going to come down like this. Okay, so notice how much easier it is when you have the high time frame bias. We're only looking for shorts here because the weekly is bearish and the daily is bearish. So now we're only looking for shorts. It just keeps it very, very simple. So let's just play this out. You can see we trade up into this region here, and I ended up market executing here, or you could have a pending here. It's up to you. Stop loss would just be above this high right here. And then you could look to target this low down here. So this is going to be the liquidity that I was talking about, the opposing liquidity right here. So let's just go and play this out. The market absolutely dumps after we mitigate this region here. So this was a beautiful trade idea. Remember, weekly time frame down to the daily time frame. Pay attention to this right here. The market then ends up giving another opportunity in premium of the leg, but we didn't quite make it up into a region that I would personally be looking to short from, just because we didn't come up into this region here. We had this imbalance here, but if let's say you did want to take this trade, we are in premium. So let's say you just wanted to execute after we had this indecision candle with your stop loss just above here, and you wanted to target the next liquidity pool, which would be here, then you could do that as well. Same thing, right? The only thing is here, we did have inducement. We had inducement right here. So we had old liquidity resting right here. If we play this out, you can see the market ends up coming all the way down, reaching this take profit too. So this could have been a trade where you literally just held this one. If you did believe the market was going to head all the way down for this area over here, you would have been completely fine. But see how much easier this is when you're using the high time frame and then you're looking to enter on the 4 hour. A lot of the times people try to use one time frame. I feel like you can't. Obviously, if it works for you, it works for you. But I find with swing trading, you want to be utilizing, the monthly, the weekly, the daily. This strategy specifically, we're just using the weekly, the daily, and the 4 hour to keep it simple for you guys, just because simplicity is the name of the game. So you just saw 2 back-to-back trade examples on AUD USD. Let's take a look at another pair. Let me take a minute to talk about one of the best new prop firms in the industry, Think Capital. Think Markets, a fully regulated broker, has entered the prop space. This is huge for us traders. With over 15 years of broker experience and regulation, this gives us another prop firm we can trust. We can trade right from TradingView, or you can use the classic MT5. With up to $300K in max allocation, and they also offer to US clients. I know this is amazing news to my American trader friends. You can even withdraw your profits right to your Think Markets broker account. If you use the code ARMTrading, you will get 15% off any challenge. Please make sure you sign up and create an account, then at checkout the code will work. The code is also case sensitive, so make sure you type it in exactly how it is shown. Let's get back to the video. Here we have another example on USD CHF. This provided 2 trade opportunities according to our trading plan, which was so textbook. Okay, so as we can see on the weekly time frame, we are in premium of this bearish leg. So premium just means we are in the top 50% of this big bearish leg. If we want to short, we want to be shorting from the top 50%, not in the bottom 50%. Weekly time frame, we've had this bullish retracement into premium prices. On the daily time frame, you can see we had a beautiful run on the stop losses of other traders. So we had a liquidity sweep right here. We had a shift to the downside. If we go look at the line chart right here, you can see we had the beautiful shift down. Okay, so we had the push up, and then we had the push down, breaking below the low that pushed up. So this is a beautiful sign. So once we've analyzed that we think the market is going to trade in the opposite direction, we've had the shift on the daily time frame here, then we can look to take the market in the opposing direction. So when I'm looking at this price action here, you can see we actually have this bullish leg on the daily that we have not come into discount yet. So because we broke structure here, we can expect the market to short down into the general region right here. Okay, so this is just beautiful, beautiful stuff, and I'm going to explain it to you all in one moment. Weekly time frame, daily time frame. Now we jump down to the 4 hour time frame, and we're looking at this price action here on USD CHF. All right, when I see this price action, I see a ton of stop losses right here. Okay, So this is where I think the market is going to trade into. So from there, I'm thinking, okay, where is the stop losses of these traders going to be? Because we want to see a point of interest that sweeps liquidity. We want to then see a break of structure. So we're just going to go and mark this area out right here. Let's just play this out. You can see we end up sweeping this liquidity over here. And now we're waiting for something like this. We're waiting for that sweep of liquidity, break of structure, level of inducement to then take the market down lower. Okay, so this exact same entry model, we're looking to see it again because we can see we have this big bearish leg. We retrace up into premium. If I just mark this out, we're in the top 50%. And now we're just looking to short and trade with that daily trend. So let's just play this out. There we go. So here we have the push up, the push down. We have also created this imbalance right here as well. So now let's look at our checklist. We swept liquidity. So we had the sweep of liquidity right here. We had the break of structure below this low right here. Now we're looking for the imbalance, check right here. Now we just need to see some sort of inducement. We can then look to short and look to enter. So let's just play this out. Here we have the inducement being created like so. Boom. So we finally get that run on this inducement, and we can look to put our entry anywhere within this general region with our stop loss just above these highs, and we can look to target these lows down here because like I said earlier, these are going to be the stop losses of those traders that we are looking to target. We ran the stop losses of these traders. Now we're going to look to take the market down into these areas here. Okay. So let's just play this out and see what happens. You can see we actually end up running this one more time. So this could have been an entry above this inducement, but because we ran these lows or these highs here, I'd be okay entering this trade, especially when we see the slowdown that we're getting right here in this general region. So let's just go and play this out. And you can see we end up doing the exact same thing actually. We end up giving another entry that could have happened here. So let's just bring this to the side for a second. We just got the exact same thing play out. So this is how you can get these scale ins on these opportunities. We have this imbalance that's been created, right? And let's go through the checklist again. We have our high time frame direction, which is going to be bearish. Our POI swept liquidity right here. Look, we swept these candles and we caused a break to the downside. We broke below this low here. We broke below this low here. Now, this is an area where we can look to enter if we do end up running this inducement right here with the same target. So maybe a little less risk reward, or you could just put it above this high. This is textbook, and this is how you can really scale into these opportunities if you wish. Okay, so let's just play this out. Oh, missed. That's unfortunate. It is what it is. Still, beautiful, beautiful, beautiful idea here. Okay, do you get what I mean? We had the imbalance, we had the break of structure, we had the inducement. Boom. Now you could have market executed here if you really want to. I market execute all the time. I don't set pendings personally. Once we had this indecision candle in the imbalance, you could have entered, or you could have got missed like I just did. It's entirely up to you, but still, concepts right there. Okay, so if I just drag this across, you can see the TP was hit on this trade, and we ended up going a little bit lower, I believe, all the way down to this general region over here, which was discount of that price leg that I was talking about earlier when we started marking down USD CHF. All right, so this is beautiful, beautiful job utilizing this strategy. So let's take a look at another opportunity. Here we have another example on NZD USD. You can see we are clearly bearish right here. We ended up running this high over here before having that solid push to the downside. I'm anticipating this low to get taken out. So this is my high time from directional bias. I'm anticipating shorts until we run this low at minimum. Okay, so now I can jump down to the daily time frame and take a look at what price action is showing me. Okay, I see this area here as a nice structure point like this, and this is a beautiful kind of order block or supply zone, whatever you want to call it, that's kind of holding price, and I'm anticipating the market to trade down lower. Now, if we look at this from a fractal point of view, Fractal means the same patterns you see on the weekly and the monthly are the same patterns you see all the way down to the seconds time frame. It's the same, okay? So if I'm looking at this right here, I see the exact same setup that I saw on AUD USD, but just on the daily time frame. Now, if you want to take trades from the daily time frame, you can do that 100%. It's entirely up to you. But I just want to show you that the exact same patterns play out, and then we can utilize that to our advantage by then waiting for that same pattern to play out on the 4-hour time frame. So we see it on the daily, and then we look for it on the 4-hour time frame. See how we have that inducement right here, right below this point of interest? To me, this is a good sign because that means we've taken stop losses out of the market of these traders on the daily, and then we can look to take the market down into the stop losses of the other traders on the daily. So from here, I'm jumping to the 4-hour time frame, and I'm simply waiting for our setup to occur where we get the break of structure after we've swept liquidity with the imbalance, with the inducement to then take the market into opposing stop losses, okay? The opposing stop losses are going to be down here, and they're going to be below this low here. See what I mean? This big area here, this big general point of interest right here, we swept the liquidity here, and now we're waiting for the same entry model. Okay, so we want to see the same entry model play out. So something like this, the break of structure with the imbalance and the inducement, boom. All right, so let's play this out. This was again another trade that I took. And I'm not too sure. Some of you may have seen this one already. Some of you may have not, but still, this is just a beautiful example. So here we get the break of structure, right? This is going to be our point of interest that we are using, this general region, because what did we do? We swept liquidity. We caused a break of structure below this low, like so. And now all we're doing is waiting for an imbalance to be created, which is going to be, sorry about that, it's going to be this area right here once this 4-hour candle closes, okay? So the 4-hour candle closes and we get that imbalance. Now what we're doing is waiting for inducement to be created. So it can be this region right here, right? And then we're going to set our pending limit or market execution if you're on the charts like this, and then we can look to target this low down here, or we can look to target this final low down here for better risk to reward. Now let's go play this out. You can see we get tagged into this trade beautifully. Now myself and a bunch of other RM trading members were in this trade. This was a trade that I forecasted in our Sunday weekly outlooks. I send out all the pairs we're looking at. So yeah, we're always on top of what opportunities can potentially happen. This was one that we were waiting for, and a bunch of us ended up catching this trade. So if I just go and play this out, the market ended up giving another scale and opportunity right here, okay? So this imbalance, we've now created an inducement. If I just mark this out like so, and then you can do the exact same thing as we did with USD CHF because we had the run on liquidity, the sweep of liquidity, right, the POI. We then broke structure again, right? Now we've left behind an imbalance, and now we're creating that inducement to potentially do something like this, to come down in this general area. Now I didn't take this trade because I was not break even on this setup yet. So I was totally okay with this setup just kind of playing out. But if we go and set a pending on this trade above this inducement with your stop loss just above these highs, and then we play this out, let's see what happens with this bad boy. So let's just go and play this out. You can see we get tagged in this trade. We're still in this trade, and then we finally hit the take profit on this thing. So this is how you could have scaled into this thing even more. I didn't go break even on this setup here, so I didn't look to scale in, but you guys get the concept. Utilizing the weekly to the daily to the 4-hour for entry, we're just trading in alignment with the overall trend. So now let's take a look at some long examples that we caught. Now this beautiful setup was taken by a bunch of our community members. I wasn't in this trade, but this was textbook, okay? So again, weekly time frame, you can see that we are clearly trending bullish. And what we're expecting is a reaction out of discount of this weekly leg right here, right? Because if I go and measure this like this, we're in the bottom 50%. So now that we're anticipating longs, we then can jump down to the daily time frame and look for the exact same thing, right? The fractal nature. Here it's a little bit more clear, right? We're just simply expecting the market to come up and to trade into this general region up here. And from there, we're then jumping to the 4-hour time frame and looking for our areas. Okay. So when I'm looking at this point of interest right here, this is the fractal part of the market that I was talking about. We had the sweep of liquidity to the left here. We had the strong shift to the upside, retrace back into bottom 50% of this. Now, this is a trade that you could have taken right off the bat if you wanted to. But what I mean by the fractal part of the market is now we're just going to wait for the exact same thing. We're going to wait for a sweep of liquidity, a break of structure with an imbalance to then take the market higher. So it gives us like a lovely kind of confirmation type entry here. And again, this is, like I said, a trade that a bunch of our members caught. So this is super, super clean example. So let's just play this out. We're waiting for a sweep of liquidity with a strong break of structure above these highs here. Now we need to see an imbalance formed, and then we need to see some sort of inducement get created, okay? So here we end up coming into this area like so, and this is going to be kind of our inducement that we're looking to play, all right? So now that we've had the break of structure above this high, we've created this inducement, this is where we can look to scale in or get into the market. So let's just put our stop loss below these lows. We can look to target these highs or this general supply zone up here for our take profit, right? And like I said, this is going to be the target, the opposing stop losses of the other traders on the opposite side of us, okay? So let's just play this out. You can see we actually get tagged into this trade here and we almost get stopped out, but it ends up mitigating this imbalance right here fully into this order block. So this is beautiful. Your stop loss is there for a reason. And then we go and create another imbalance here. So this could have been a trade, guys, where you scale in as well. I know a couple of members on our team did do this, and this is the beauty thing about this strategy is it provides a lot of scale in opportunities, because when the market is trending nice, like let's just draw an example for a minute. When the market is trending bullish, trending nice, these are all scale in opportunities where you can look to get in here, you can look to get in here and here if you really wanted to. This is something that I'm actually going to be working on this year, is scaling into the opportunity. A lot of the time I will just enter on the first one and then just let it ride. But I'm realizing now, even just doing this video, how many opportunities show up that I did not take advantage of that I'm going to work on, like you guys watching this video, to take advantage of in 2025. So here we go and create another imbalance like so, right? What do? We create this beautiful imbalance. We sweep liquidity of these candles right here before causing a shift to the upside. Then we're expecting the market to come down into this region. Now, the only thing about this one is we don't have a level of inducement, but what you could do here is wait for the market to, or wait for the candle to close, and then you can kind of judge if you like the rejection or not. Then you can look to get involved with the scale in, right? So here we just mitigate this order block with a beautiful rejection candle here. So this is a trade where you could look to market execute once we had this indecision candle with your stop loss below this low over here, and you could look to target these highs or the same target you had on the original position. So let's just go and play this out. You can see we start to respect this imbalance, and then we start to push to the upside, taking out this take profit very nicely, okay? So if I just go and clean this up and draw this across and say you didn't enter in the scale and opportunity, this is what that trade would look like, right? Beautiful, beautiful use of the weekly and the daily, and then the 4-hour for that entry, right? See how these all look the same? Like if I go and invert this, it looks the exact same as our other short opportunities did. We have the sweep of liquidity, the break of structure, right? Then we have that inducement right here, and the same thing goes for this one as well. They look the exact same way, which is beautiful. So now let's take a look at another example. I hope you guys are starting to understand this. All right, so here's an example on CHF JPY longs. Again, utilizing the weekly, the daily, and the 4-hour time frame. Here we have this leg that was created on the weekly. We retraced into the bottom half of this 50% range. And now we're expecting the market to rally to the upside. Another beauty thing about this trade is we ended up running this liquidity right here. So if we look on the daily time frame, we end up running the stop losses of these traders, and we're coming into discount of this leg, right? So we're in discount of this weekly leg, and we're in discount of this daily leg. We ran this liquidity, so now we're looking to take the market here. Now, in terms of the fractal part of the market, what I want to see now is the 4-hour time frame flip bullish, because the weekly is bullish, the daily is bullish. Now we want to see the 4-hour flip bullish. Now, many of you may be thinking, oh yeah, but Mac, look at how bearish this is. yes, this is bearish price action, but we are now in discount of this bullish leg. So for me, for the market to switch to full bearish on the daily and the 4-hour time frame and the weekly, now for me, this is still bullish until we break this low, because we broke this high right here. So I'm still looking for longs, even though we're coming down like this, because this is the price leg that we are playing within. So from there, I'm looking on the 4-hour time frame for some sort of structure to shift or be created to then take the market in the opposing direction here to continue that high time frame trend. So if I just go play this out, you can see that we actually end up getting that beautiful shift above this high here. So we have the push down, then we have the aggressive push up like this. So this is looking very, very nice, to be honest. Now all we need is the imbalance, and we need the inducement to be created, right? So here we end up coming up and creating that nice structure right here. All right, so now we're creating this nice inducement, and you can see if I mark this out, this is the imbalance that was created. This swept liquidity to the left before causing a shift to the upside. So now we've had a shift above this high, we've had a shift above this high, and now we're expecting the market to trade in alignment with the weekly and the daily. This is what I mean by the fractal part of the market. We want to wait for all the time frames to align. So this is one where you could simply market execute below these lows. See, we have the inducement being created. You can just put an entry here, stop loss just covering this low, and you can look to target 2%, or you can look to target up here. It's entirely up to you. But let's just say we go to target 2%. If I play this out, you can see we end up taking out that level of inducement with precision, actually. Shout out Andre. This is a beautiful trade that Andre caught. And then we just play this out. You can see we kind of chill. Level of inducement right here. Then we start to push to the upside. So this would have been the best entry right here if you wanted to wait for this level of inducement. But because we already took the lows of these candles right here, and we are within the imbalance, I'm okay with entering this trade right here, just so I'm not as picky, and so I don't miss the setup, right? So if I just go and bring this over to where it was, you can see we are now about to create another scale-in opportunity, right? The amount of scale-in opportunities that you can do with this strategy is pretty crazy, and I need to take advantage of it this year. Like I said, it's something that I didn't do last year. I just entered on the one, and then I would just move on. But I'm really going to try and scale into these opportunities, because they are just endless, especially with these ones that I've covered today. So now you can see we hit take profit on this one, okay? And we repeat the exact same thing. So now we have this imbalance that's created all the way down here, right? We break structure above this high here. Now the only downside about this one, if I remember, is we don't have a nice level of inducement. Maybe we do get one if we're waiting for this to play out. You can see we come down into this region. So now, yeah, so if you wanted to enter, this looks like you would have been out of luck unless you set your pending limit in this general region here, stop just below the low when this candle was formed. So because of how TradingView is right now, I wasn't able to do that. But this is where real time, obviously, you can look to market execute. Once this candle here is made, this is a nice area that you can set your pending below it, because this is now the level of inducement, right? The stop losses are going to be below here for traders who thinking this is the move. And then it comes down right into this general region. Then we pump to the upside. Now, the cool thing about swing trading is you don't really have to worry about news or anything. Because of the size of our stop losses, you have bigger stop losses. You're not likely to get slipped. Obviously, you can trade with news. It's up to you. But I personally don't cancel positions or get out of a position early because of news. If it's CPI or NFP, those are days where I want to already be in a position. But if it's just regular red news, I'm totally okay with trading, because this was a news move here. I guess this was yen related, where the market is still going to move to the valid area, right? It's not just going to go to some magical area. If your trade is right, your trade is going to hit take profit a lot sooner. That's a beauty thing about news, is because the volatility comes in. And as swing traders, we want to see volatility. Otherwise, your trade can go from taking less than 1 day to a week. So it's entirely up to you. But again, just look at these entry models. If I just go and flip it upside down, you can see it's the exact same thing. We're just following the trend, right? We have the inducement, the imbalance. It's beautiful stuff. Same thing here. Wasn't as clean as this one, but still the same process, the same analysis, and the same execution. So I hope you all enjoyed this. If you do want to spend 2025 with the RM Trading family, you want to learn from me in more detail, you want to see Sunday weekly outlooks, you want to see daily video case studies, many other trading resources, and of course, the best Discord server around filled with amazing traders and even better people, then make sure you check out this link right here, rmtradinggroup.com, and you can take a look at the testimonials. You can take a look at everything we offer and see if there's a fit for you. So yeah, I appreciate you all. Have a happy new year. I hope this video provided a ton of value for you all. And let's get this year going right. I'm so pumped for January. Please smash that like button. Hit subscribe if you're new. Drop a comment. Spread some love in the comments, guys. We want to see love. We don't want to see any hate. And let's start this year off on the right foot. So I appreciate you all, and I will see you in the next video.